Time now for our Smart Charts segment, where Abigail Doolittle is standing by with a chart and something smart. Abigail, take it over.
Well, I hope that we can give you something smart, Romaine. And we're bringing in Katie Stockton of Fairlead Strategies in just one moment, because this week we're taking a look at stocks and technology in particular, starting out with the stocks. I'm really curious about the stocks because we've had a big rebound rally out of the lows driven by the chips. And if we go into the Bloomberg terminal and take a look at this chart of the stocks, take a look at that, up about 40%, more than 40% off of the bottom. But that pattern there, that rising ascending wedge, the fact that it is narrowing tells you that the buyers who were very enthusiastic at the lows, less and less so. Yesterday, you can see the bottom of that pattern was dented, possibly setting up for a move lower. But on today's big rally, the chips up nearly 6%, back in the rising ascending range. It's unclear whether or not the chip sector is going to go higher for another apex or maybe just lower, really an inflection point there. But either way, it looks like there's some deterioration for chips. And again, these have been some of the leaders in this rebound rally. So to talk more about the stocks, chips, and the S&P 500, now I'd like to bring in Katie Stockton of Fairlead Strategies. And Katie, that chart to me, it really does look as though there could be some weakness ahead. There will be some sort of retesting of the lows for sure. And you have a great chart of the S&P 500 that I believe, if I'm reading your signals correctly, may suggest the same sort of action.
Yeah, I mean, really the market is such a top-down driven tape right now. So the comments that we make on the S&P 500 can apply to the stocks and really just about anything out there. We've seen certainly a loss of short-term momentum over the past week or so, and what that has done is reflected a reaction to overbought conditions, which had been in place for a couple of weeks. Now we have downturns in those overbought, oversold measures like the stochastic oscillator, and that downturn does support a greater pullback than we saw yesterday. So a pullback that could be in the range of maybe 1 to 2 weeks. And it would be very natural to see that pullback in here based on the proximity of resistance levels for things like the stocks and, of course, the S&P 500, which had come right up into its 50-day moving average, and resistance based on a couple of other measures.
Yes, indeed. And I don't believe that we've been able to pull up that chart quite yet, so I'm hoping that we can now. But if not, as you were mentioning, your comments really apply to any index. So the other chart that you were taking a look at, the XLK, there's that S&P 500 chart that you were just talking about. And you can see the index still below that 50-day moving average and that momentum on the bottom perhaps moving back down. And now if we do turn to your XLK or tech index chart, there's some relative weakness to the S&P 500. That could be a problem given that tech has been such an engine for stocks for such a long time.
Right, that's exactly right, and it's something that is differentiating the current environment from previous environments. We've really seen large cap technology stocks, which are the holdings in this XLK or Technology Select Sector Spider ETF. And we've seen them outperform really on the upside and the downside. But just yesterday, we saw a little bit of a chink in the armor of the large cap tech arena, and that followed some overbought sell signals late last week. And that led us to look at this comparison of XLK, or the technology sector, to the S&P 500 in the bottom portion of the chart there. And you can see over the past few weeks, we have a lower high in the ratio between the two, meaning there's been a loss of momentum relative for technology relative to the S&P 500 as both have moved higher. And that does differentiate the current environment from previous ones. And what it tells me is that we may, on the downside, when we do see a pullback, whether it happens imminently or a little bit later, we may see large cap technology stocks actually underperform. And wouldn't that be a sentiment shakeout that we really haven't experienced yet? And that would be the likes of Microsoft and Apple and Netflix and Google. Those names have held up relatively well to date.
Great insights, Katie, and a lot of other folks on the street worried about the fact that the NASDAQ and those big tech names have been outperforming, and that chart you just presented certainly makes the case that to the downside there could be some underperformance there. That would be quite a shift in sentiment. Katie Stockton of Fairlead Strategies, thank you for joining us for Smart Charts.